All righty. Good evening. Good late evening to everybody. This is a special Thursday night session, actually live. So a lot of people that check out our videos, some of them are recorded, but this one is actually live. This is me talking right now. We have a special guest, Tanner, aka Charting Options on Twitter. Tanner, are you ready to look at what are going to be some interesting charts into the last day of February, to say the least?
Happy to be here. Yeah, without a doubt. Great timing. We
Yeah.
have a lot to unpack for sure.
Yes, we do. And what I was thinking we do is we go through the broad markets, get a kind of a high level view of what's going on, what's holding, what's not looking so great. And then we'll dive
Yep.
into a couple names that are just so popular that, it would be irresponsible not to go over them, because stocks like Tesla, which is clearly a poster child of this bull market. We want to see what's going on with that. We're going to look at seasonality. Seasonality is not an end all be all. It's not, hey, seasonality is this percent next month. It's going to go down. It's just something that we compare with the technicals. And also, I am wearing this nice furry hat in memory of the very big snowstorm that's pretty much already gone in Denver today. That's the beautiful thing about Denver. A lot of the snow's already melted, even though we got 16 inches today. So this is keeping me nice and warm, and figured we'd keep it kind of chill and kind of laid back tonight with this session. So I'm going to be driving the charts. Tanner's looking at the charts as well. And if there's something that he wants to pull up, he's just going to tell me to pull it up, and we'll go right into it. So um, Tanner, let's just talk overall about the market over the last couple of weeks. I mean, there's not many names that have been spared other than Twitter, it seems. Uh, what's your take on this whole thing?
Yeah, I mean, the February's been kind of rough sledding for the most part. I mean, it's been pretty choppy. I know we started off what seemed promising off of the January lows, or I guess that was right at the turn of the month. Um, and it seemed like we were going to get. I mean, we tested the 50-day at least on SPY, and then we got back above both the 8 and the 21, which are big for me. But kind of since then, it's been pretty flat, and obviously the last 2 weeks, last week, and then really this week, it's been really rough going. So, at the moment, um, I'm very much so like everybody that I'm sure is watching and will watch. It's really wait and see right now. I think the next few sessions are going to be very telling as
Yeah,
we go into March.
I agree, and we'll look at some of these weekly charts. Obviously, the week isn't over. We still have Friday tomorrow, and obviously the month of February isn't over. We still have tomorrow's candle. Excuse me, um, tomorrow's the last day, so that's going to finalize the candle for February. One thing that I want to point out, and this is something that I mentioned a week or so ago, and I should have paid more attention to it on my end. One thing that's really interesting is seeing all of these absolutely crap stocks going up again. GME, AMC, that was kind of like the last day. But the main thing was the weed stocks. What's really interesting about that is the fact that if you look at 2018, September of 2018, the marijuana stocks absolutely ripped. That was when Tilray went to the moon. That's when every other single weed stock went to the moon, and that was literally the last leg for that move up in the markets. And then October to December were brutal, and it's really interesting to see that the marijuana stocks did their thing. GameStop did its thing. I talked about this today on an interview, and I don't think this GameStop move, and I don't even really think it was retail moving it before. Obviously, it probably exacerbated the whole move, but I think this is, and whatever the market does, the market does. But generally, if you have moves like you had in GameStop, AMC, there's some type of liquidity issue there. Somebody's over leveraged, somebody's on too much margin, and it's probably not retail. It's likely some of these bigger funds, institutions that are over leveraged, probably got complacent. When GameStop went down to 40, everybody's like, "Oh, next stop is $5. This is too easy." And then with social media and with Reddit and everything, it's so easy for these things to catch a bid as soon as everybody sees them. So just wanted to mention that there are some telltale signs that there is some weird stuff going on. And that's not my job to say if that means more than what we're seeing now, or if the market's just taking a little bit of a dip. Let's look at the charts and let price action tell us what's going on here. Tanner, can you see my chart?
Yeah, I got you.
Okay,
You got the
we're good.
weekly up. Yeah.
Weekly,
Yeah, just to add to that, just
yeah,
to supplement,
yeah,
OTC stocks recently went kind of bananas too. So it's
Mhm.
another little telling sign for sure, just to kind of throw that in there. But yeah, I see your chart.
One of my good friends from college has jumped on the OTC train over the last six months, and he made some good money.
Yeah.
He was also trading stocks that had like a 900,000 market cap, but when you're
Damn.
and that's the OTC stocks are great, right? When you have $1,000, you can ride that wave, and you can play these small stocks, but. It was funny to see him really hitting some home runs over the last couple of weeks, and that's kind of stalled as well.
Yeah.
So on the weekly side of things on SPY, this is a chart that I've been talking about on the Sunday show for at least a week now. I think 2 weeks. And what I've done here, as always, I'm drawing two lines. So I'm highlighting a zone rather than just a resistance and support area or line. So what I've done here, and you guys can see here, I'm essentially connecting the wick from this capitulation point, and I'm connecting it to this wick here, and we're kind of extending that area. Now, what's interesting is you can see that I've also started a trend line from this body, and it's almost parallel. It's not fully parallel, but you can see how this secondary trend line acts as a nice level of support quite a few times as we've moved up. Now, the question is, are we just going to possibly undercut this a little bit and bounce right back up and go to the 400 plus on SPY at least? Or is this kind of telling that maybe things are getting a little toppy here, and maybe this is something to keep in mind. Now, this is not a show to predict what's going to happen. We're just looking at the charts. We're looking at these levels. And that's really the name of the game. You want to just look at the levels. There's nothing to predict. The market could rip tomorrow. I don't know what's going to happen. We just want to look at these levels and see what's breaking down, what's not. And before I go too much in more depth, one thing, and Tanner, I'm sure you've noticed this too, is Bitcoin. Bitcoin has been a very interesting bellwether for the markets. I mean, whenever Bitcoin is strong, the markets are strong. Whenever Bitcoin is starting to get liquidated, i.e., what did we have that on Monday or Tuesday when we had that huge candle down? That's kind of a telltale sign that, okay, guys, maybe it's time to consider that there's going to be some liquidity events going on here, and that's kind of what we've had this week after Wednesday's candle that looked very hopeful, and then today was just an absolute massacre. So Tanner, from here on out, is this something that you said we're going to wait and see? Are you kind of positioned in a way that just wait and see and just kind of small right now, or what's your plan?
Very small. I'm not all cash, but I'm damn close. So because my strategy is mainly focused around active trends, which I mean, I would assume most trade trends to an extent, but the choppiness really does not suit well for the way I trade. So when things are below what I look at as the 8 and the 21, and then there's a lot of stocks right now that are referring to the daily time or moving averages. There's a lot that's below even the 50 right now. So when that is going about, and then specifically today, SPY lost both the 8 and the 21 after it reclaimed it yesterday. That's really a big sign for me to pretty much stay mostly cash. So I took one position today in a name that's leading tech, which is Oracle, ORCL. And that's pretty much all I'm in at the moment.
Makes sense. Yeah, it's one of those things. If you're using charts and charts are working, it's very similar. And I always make this comparison on my personal account. I love blackjack, by the way, if you couldn't tell. If you're playing blackjack and the hands are not hitting, or the probabilities are not hitting the way that they should be, Meaning, let's say that you've got a 20 and the dealer comes out and hits 21 3 times in a row. The status quo is off. The probabilities aren't working. The charts have not been working lately either. Really good setups are showing, promise, and then they absolutely get annihilated. And it's kind of like playing blackjack. Generally at that point, you're like, well, screw this. Dealers literally hit 21 3 times when I'm showing a 20. I'm out of here. And that's when you kind of take a break and you kind of let things play out. Same with the market. If you're playing charts and they're not working out, there's no point in playing the charts if they're not working. You want to step back, let things calm down, let the dust settle, let the dealer reshuffle the hand, and then we kind of go from there. So, on the daily side of things on SPY, we have this gap below still. This is something I pointed out today. The gap is right in line with this 50-day SMA. So, this would be an area where naturally people are going to be looking at possibly a bounce. Now, if you did anchor the VWAP from this swing low here on, October 29th, this would suggest possibly some more room to move down. Now, it doesn't have to. The 50-day SMA is definitely a powerful level that a lot of people are keeping an eye on. I've seen this mentioned on Twitter multiple times that a lot of people are watching this. So, this becomes almost a self-fulfilling prophecy.
That 50s, that level is also confluent with your trend line on the weekly.
Yep.
Which is, so there's some serious confluence right there.
Yeah, I wish if we went to the weekly, I wish we could put the daily SMA on here, but we can't. However, let's turn off the weekly SMA and we'll just look at this anchored VWAP. So what I've done here on the weekly side of things on SPY is I've anchored a VWAP from this big impulse candle, pretty much from we're going to call this the election candle. This is when the status quo changed, the market status quo changed because the election results were over. The market was able to kind of move forward. Now, that is around 369, 370. That would insinuate that the gap fills below on the daily as well. But all of these things are just things that we're looking at. We don't really know what's going to happen, but it is important to know the levels, because if the market's doing something, you have to know, okay, what's my level below? What's my level above? What am I watching? That's an important part of trading and investing in general, is knowing the levels and not researching this stuff while it's happening. So that's SPY. We are on the cusp of potentially breaking down here. This is going to be pretty crucial. On the monthly side of things, the broadening formation, that was a self-fulfilling prophecy for a long time, finally broke through. We've tested this area multiple times. So on the monthly, it's still looking fine. Anything can happen tomorrow. If we drop another 3%, this isn't going to be the cleanest candle for the monthly close. But for now, we are still holding this previous resistance now acting as support. So that's something to consider as well. This is where I just go in, create an alert, and literally say, okay, if the price breaks down through this line, alert me on the 4-hour chart. I'm going to put this for 60 days in case this takes a little while. And then I know, is this going to be a bigger event? Well, when I get the alert, I definitely know it's time to at least look at the chart again. So that's SPY. Tanner, any last comments on SPY before we move on to the Qs?
No, you covered it. The only thing I would mention is not that it was too abnormal, but the amount of volume we did see specifically today is something to just kind of note on the pullback that we got.
Yeah, I think that's a great point, because I was actually looking at that today. If you look at the volume, I mean, anytime I clicked vortex, not volume. If we go to the volume here, this is a big red candle. I mean, if we do a horizontal line from any other time, this is like the second or third biggest, or what is that? The first? This is the biggest
back to September
candle we've had in a hot minute. Now, what is interesting and what's worth pointing out is look at the candle that we had in early September. This was kind of telling us, okay, hey, things are starting to get a little sketchy. And then we did have quite the move down for a couple weeks. So that is something to consider as well. I personally hate this daily candle. That's why I really went to cash today. It wasn't even worth even gambling on the profits I made in January. I wanted to lock them in. If there's something I really like, I can go back and buy it at a lower price. And if it goes up, then I deal with it and probably just move on. However, there are some positions that I did hold for the longer term, but as far as trading accounts go, I just went cash. I know some people don't necessarily agree with that, but for me, anytime we're seeing this type of volume with this type of, really, we haven't even started the drop yet. That's what scares me, is the fact that, we're still kind of near highs. And this just reminds me a lot of September, and we'll just have to see what happens. And, that gap fill below is something that I'd like to see fill, because if gaps fill below, you kind of get those air pockets out of price. So, QQQ. This one has really led the way for this move down. I mean, look at Qs. They're already way down. SPY looks like a poster child of like hanging in there. But yeah, the Qs, man, they're just having trouble here. You have seen quite a bit of rotation into COVID stocks that got destroyed, i.e. your airlines, i.e. your cruise lines. Now, one thing to get off topic here, and I probably will do this a couple times tonight. This doesn't make any sense to me. Wrong chart. Southwest. Obviously we're traders, right? We're looking at the fundamental story. We're looking at the overall picture, but this just doesn't make any sense to me. How is Southwest Airlines, how did it break above the February highs that we saw before COVID happened? That makes no sense to me at all. I know that there's a disconnect between the economy and the market, but just to see the fact that Southwest Airlines hit its February 2020 high, and we're nowhere near any type of regular traveling status quo here, that just blows my mind. So I did want to mention that, that we did have the rotation out of tech into some of these names that have been beaten down, but it's kind of crazy at this point. It seems overextended, and that these airlines and these cruise ships and these other stocks, Boeing, GE, that have possibly kept the market, at least SPY, up. If they start pulling back, that's when you start to get that add-on into the next leg down. As we look at the daily chart, any notes that you want to mention here, Tanner? Let's throw up the SMA 50. Broken.
Yeah.
Woo!
Lost that today. Yeah. I don't have too much here. I do want to just add that the same goes. What you mentioned with airlines and cruises is definitely not two sectors you want to see be leading, or at least personally. And that goes the same with kind of financials as well, which are, a lot of financial stocks right now are breaking, or at least prior to today, we're breaking either new highs or long-time resistance. And those pulled back quite a bit today too. But yeah, so it definitely probably why SPY looks so decent compared to the Qs and NASDAQ in general.
Yeah. No, I completely agree. And if we do anchor the volume by price from this low that we had in late October, we do have the volume shelf here, but unfortunately, I'm here to tell everybody that the volume shelf is not an end-all be-all either. Just because you have a volume shelf does not mean that the price is going to hold there. That's just a level of interest, just like Brian Shannon teaches with the Anchored VWAP. It's a level of interest. It's an area where obviously we've halted here a couple times in the last 3 days. And essentially, why is that? It's because at least short-term supply is drying up. Why is that? Because, well, if you're holding from, let's say, 315 on the Qs and the Qs are at 338, you have a good profit cushion here to work with, at 7% almost or more. As the price gets back down and you're still holding these shares, you get back to break even and you're a lot less likely to sell. So the reason why we see a bounce here is simply because that supply is drying up short term. These shares that are holding at break even, could easily start taking a loss. People could start selling and this volume shelf can completely change. These volume shelves and these volume nodes change as price happens. This doesn't stay the same. If people start selling, these levels are going to change. And the kind of thing that's interesting here is the fact that, we have a very big, volume gap. I'm trying to think of the word volume gap. I was going to say like no liquidity here. There's
Yeah.
not a lot of holders below. So, this is something that can really, break through. And, here's a volume shelf here. Fubo is a great example of volume shelves breaking down. I mean, Fubo was one that really looked good. You anchor a volume by price from this capitulation point, and it is holding for now. But here's what I wanted to point out is this gap. If there's no liquidity here, the price can drop very quickly. And so, that's what I wanted to point out on the cues. If we did start to move down, this is kind of an air pocket for price. And, that's on the daily side of things. But on the weekly side of things, this is something to consider as well. I mean, if we anchor the volume by price from the March lows, you can kind of see that gap in liquidity even better here. From around 309 down to around 295, there's not a lot of liquidity. There's a gap here, and prices can drop very quickly. And on top of that, you do have this breakdown of this longer term support zone with these two trend lines. So, I want to be bullish. I mean, I'm generally a perma bull here, but sometimes the charts and the price action are telling us something different. Now, it is nice that we are holding this volume shelf for now, but as I mentioned, that can easily change very quickly. So as far as the weekly side of things go, we're clearly breaking down through this about year long, maybe a little less than a year long uptrend, and that's something to consider. Is the weekly SMA 50 something you're paying attention to, Tanner, if we did break down through these levels?
Yeah, it's something certainly I'll watch, which I'm not sure where it is in the queues. Okay, so there it is.
Which is interesting.
Yeah, it's confluent with that VWAP. Yeah, it's essentially. And all that volume right there. Yeah, it's something certainly I'll watch.
So what's that? 267. Ooh. Now, just because we're pulling up these levels, that doesn't mean the price has to go down there. It's just levels of interest. As I mentioned, we're not here to predict what's going to happen in the market and say where price is going to catch a bid, but we want to know the levels at which price the next levels to watch. And it's really interesting to see if we anchor the VWAP from that March capitulation point. We have the 50-week SMA here, and we have this bigger shelf, which includes the point of control from the March lows. This would be a cushion for price. I mean, that's still it's still a 10 to 15% drop. And honestly, I think the market needs that, because then everybody resets. All of these diamond hands turn to dust hands, and we can finally get back with our life and get, a reset in the market. Because at the end of the day, people are going to take their losses. I remember in GameStop when everybody's like, hold the line. And then everybody's like, I don't even know these people I'm holding the line with. I'm going to sell when I want to sell. And people, traders and investors have a threshold at which they're like, okay, screw going with the crowd. I'm sticking with what I need to do for myself. So this is 2 weeks down. If you look at the cues, there's generally not more than 2 to 3 weeks red in a row. I mean, even if you look at COVID, we had a big drop. We had this kind of consolidation candle, and then we continued down. So, it's not, it would be really hard for me to believe that we just go straight down to this level or even get down to it at all, but it would be healthy, I think. And I think a lot of people would agree. We need some type of capitulation event to kind of get everybody out. And who knows, maybe it already happened. Maybe I was part of the capitulation today. I don't know, but I'm willing to accept that there could be lower prices. Now, the one thing on the monthly side of things that I want to point out here is the fact that we are at this really longer term level of resistance. I mean, this level is from 2016, so it's about 4 years old. Let me turn off the volume by price in the SMA here just to look at things. But, we are at long-term resistance. And if you look here, sometimes we get a really big pullback all the way down to this green area. I would bet against that doesn't happen. However, there are times where the price has pulled back for months at a time. I mean, look at this. This is 4 red months in a row in 2018. This is what we were talking about with the weed stocks absolutely exploding, which kind of was a top in the market. This is not what I would call the most bullish candle for the month, but the month isn't over. We still have tomorrow. Who knows? We could rip to the upside and close way up at, that would be crazy if we closed way up in the 320s, but it could happen. Anything's possible. So right now we have to take it for what it is. There's a day left. Not the most bullish candle I've ever seen on a monthly chart for the Qs. And going into the seasonality side of things, let's look at 2010, and then we'll look at 2015. So from 2010, the reason why I'm starting it from 2010 is because that's really when we bottomed out in the markets after the financial crisis. And we have pretty much gone straight up since then. We did have a couple of these strong pullbacks in 2015, 2018, 2020, COVID. But for the most part, it's been a pretty strong uptrend. So we want to know, since that status quo change, since the market really stopped that financial crisis low, what does the seasonality look like? In this case, March has a 55% win rate. That's about 50-50. It's not really giving us any type of edge here. Now let's look and see since 2015, because 2015, let's do since 2016, because 2016 is pretty much when we capitulated in the markets as well. That was after the oil crisis. And February only has a 33% win rate, and then March has a 60% win rate. So still not that much different from what we looked at from 10 years ago. So in this case, the Qs aren't really telling us a ton on seasonality. Now, what I do want to point out is the Dow Jones, DIA, which is the ETF for the Dow Jones. This is interesting. If you look at the Dow, we're pretty similar to the Qs, where we're at this longer term level of resistance. On top of that, we are going into March, which only has a 20% win rate over the last 5 years. Now, if we go to 2010, that does increase a little bit to 55%. So kind of a little greater than 50% win rate. But 2010 is 11 years ago. I generally am liking to do this from 2015 or 2016, 5-6 years, 17% since 2015, 20% since 2016. It's not a great seasonal look for the Dow, and we're at this long-term level of resistance. However, we could easily blow through that. And what makes me a little more bullish here is the fact that if you look at the ETF for the small caps, IWM, this is something that's really interesting. We have actually broken through this longer term level of resistance here, starting from the year 2000. So the early 2000s is when this trend or this resistance starts, and we actually finally broke through it. Now, what I've highlighted here is 5 green months in a row. And I actually did that using the patterns feature here on TrendSpider. So I just, sometimes the patterns feature will get a little noisy. So if I just type in 5 green candles here, it's already going to be on there, but I don't have it turned on. So I just click on patterns, and you'll see these are 5 green candles. Now, with 5 green candles, what I highlighted was anytime that we moved up from a primary move up. So what I mean by that is I didn't highlight these 5 green candles because we pretty much bottomed here. So, we're just ripping off the lows. Now, the next 5 green candles here looks very similar to what we have now. I mean, almost identical. You've got this huge impulse move up. We have 5 green candles here. We then have a red monthly candle here. And then we have another 5 green candles up. So it's kind of eerily similar to what we saw in, 2003, 2004. And then we pulled back from 60 down to around 51. So that's over a 10% move down in 6 months. Doesn't mean it has to happen, but what I'm doing is I'm just highlighting these areas that have moved up 5 months in a row after we've already moved up. So when I turn off the patterns feature, these green candles are the only ones that stick. Now I did include this one. It didn't show up on the pattern recognition, But sometimes with the pattern recognition, since technically the monthly close in June of 2018 was a little lower than the open, even though we closed higher than this previous candle, it's going to count this as a red volume bar. I'm going to count it as an actual green month. So when you are using the patterns feature, just keep in mind, if you are looking for 5 green months or 5 red months in a row, you have to keep in mind that. I am trying to get the dev team to change that. So it's just 5 green candles. It's not like, 4 green candles and 1 hollow red candle. Because a hollow red candle is actually considered a green candle in the pattern recognition, which I would like to fix. Now, Tanner, do you do a lot with IWM stuff? Are you more focused on kind of the tech side? Have you been paying attention much to IWM, or are we just kind of letting this one be the leader for now and just kind of seeing what it goes, what happens from here?
Not so much worried about the ETF itself, though I do pay attention to it because it matters in terms of where money is. But I have noticed specifically what you pointed out. So I have been trying to ride a lot of small caps because it's been so strong over the last year. And I think the observation you made comparing it to 0304, the timeline on that also lines up. It's a similar time of year that we're seeing that move from point A to point B. So this is something that certainly, I know I've seen a lot of people have been calling for an IWM pullback. So it'll be interesting to see kind of how this does shake out and if we are able to stay above that old resistance going forward.
Yeah. And IWM is very risk on. People are trading small caps when they're not worried about risk. And so, the fact that risk on did break out, i.e. IWM, is worth noting. The fact that this broke out is not bearish.
No.
So that's definitely something to consider when looking at this whole thesis of, possibly the market's pulling back. And that's what you have to do as a trader. You can't have this thesis that markets are going down. There's no way that, we're going up. You have to look at all the variables here. I mean, IWM is showing some crazy strength. Now, keep in mind that this has been an insane run. I mean, in the last year, from the lows, IWM's up 140%. But if you compare it to where we started from before COVID tanked, it's only up 33%, which is still a ton. So, this is something to consider. We do have 5. I'm assuming that we're going to close as a green month tomorrow, unless just something crazy happens. But, it is important to look at these moves and say, okay, just like if you have 5 red months in a row, it's probably pretty indicative of a bottom. Just like if you have 5 green months in a row, especially if you're not near one of these local bottoms, it's time to at least consider maybe it'd be healthy for us to pull back at this point. So we'll have to see what happens. Since 2016, we have a 40% win rate for March. Since 2015, it goes to 50. Since 2010, March has a 64% win rate. So, the seasonality is more than not in favor of the bulls here. But remember, seasonality is just one very small variable in this whole thing. We have to keep in mind the charts. We have to keep in mind how many months green we've closed. So that's something to consider. Before we move on to some of these individual names, let me plug in my phone here because I'm gonna have to look at my phone for chart requests here in about 10-15 minutes. And do you have the time, Tanner? Sorry, my
34, 9:34.
Oh, man, time flies. Okay,
Yeah.
cool. So let's run through some of these individual names. But before we do that, any last words on the overall broad markets or just what you're seeing on that end?
No, not really. I think that just the one thing I want to kind of maybe not caution, but emphasize, and it aligns completely with kind of the position you took today by going cash, is you can always put a trade back on. Always can put a trade back on. And it's just something that I know it took me a long time to realize, and just some food for thought. You can always put a trade back on.
Yep. Puru brought that up, when I interviewed him. He's like, hey, I took a loss on pins and then I got back in on a higher price. Now, I did mention on my personal Twitter that, a lot of people are probably going to do that with this move down. And then we moved up. And then today's candle, I was just like, screw this. That thesis is out the window. So I really did think that was going to be a short-term bounce, and just the way, especially with the monthly candles closing, like this is the time where you look at those and you say, okay, well, we have to look at this overall time frame analysis, not just one single time frame. And that's something I was definitely considering. But yeah, and that's exactly what you mentioned. You can always buy something back. Ideally, you buy it lower. At least you feel better about it if you can buy it lower. But if you have to buy it higher, at least you have some conviction that there's strength. It's never fun buying a falling knife.
Yeah.
It may feel great if you absolutely nail the bottom, but you do that 10 times and you're probably not going to have a winning rate there. So I think that's a great point, Tanner, that you mentioned that. And a lot of people are still thinking this is just a easy pullback, and it easily could be. I mean, I hope I am wrong, because nobody likes a red market. I mean, it's no fun. Everyone likes to see green. I've tried to short the markets before. I'd rather hold cash than try to be the next big short and be Michael Burry and try to do all that. I'd rather just hold cash as a position rather than try to go play puts, because I personally don't like betting against the US stock market or the economy. I don't want to wake up every morning hoping that something negative has happened. I've tried to short before, and I don't like that mindset. I'd rather hold cash and wait for the market to tell me that things have stabilized. Let's move into the poster child of the market lately. That's Tesla.
Yeah.
We've got the weekly chart here. It looks very similar to the Qs. This longer term support is breaking down. But like the Qs, Tesla generally doesn't have more than three red weeks in a row. That's tough to say. 3 red weeks in a row, and this would be the third red week. And it does happen. You can see it's happened here in the 2019s and the 2018s a couple times, but at least in this trend to the upside, which did just break, so that's something to consider. We generally kind of at least pause after 3 pretty red weeks, and so that's something to consider. We do have this wick. I saw after hours price action. I'm not exactly sure what it closed at, but I don't think it was great. But at the end of the day, after hours and futures at this point don't mean anything. I've seen so many people post green futures like 3 days in a row now.
It pulled back to just below 670.
Okay, so a little weakness there. Sorry, I'm just pulling up the live stream. So if anyone does have some chart requests, we can start at them, or any questions.
I forgot to mention real quick, the VIX did shoot up today too, and it's something to be mindful of. Just kind of going back on the all encompassing on the market. We did see quite a jump in the VIX today.
And I think I saw a statistic that I think Rolando Santos mentioned, if you have over 30% change on a daily candle for VIX, generally that's marked the bottom quite a few times in the past, other than 2018 COVID. So that's definitely something to consider. It is interesting to me, the fact that VIX is nowhere near what we spiked to earlier a month or two ago. Because what do we go to 38 or something?
We did.
Spike. So I think that's a great point. You always have to look at the VIX, and that was something that I was like, a couple days ago when the market was tanking, the VIX was barely moving, and I'm like, okay, and that's why I was pretty confident in saying, hey, this is just a pullback. But with the VIX kind of moving up like it did today, it was something to consider. It doesn't necessarily mean that the VIX can't keep going up or it has to go down. But like Tanner said, I mean, what was it today? 30%?
Yeah, no, you're spot on. 35%. It jumped
35%.
Today. Yep.
So
and I saw the same post. From Rolando.
Rolando has some great statistics.
He does.
He's really good. So Tesla, we're breaking down, looks pretty much identical to the Qs. We'll see if this three red candles in a row means anything. But for now, we just have to take price action for what it's telling us. We're breaking down through this longer term support. On the monthly side of things, I did want to point out that this is not what I'd call the most bullish monthly close if we close like this tomorrow. And if we look back since 2010, March has a 50% win rate. It's not really telling us much. Let's look back since 2015. Over the last 5 years, March has a 33% win rate. And pretty much since we bottomed in 2016, it's about 40. So leaning a little more towards the bearish side on the sentiment. Pair that with the technicals, and I wouldn't say this is what I'd call a holy grail setup into the week ahead. Now on the daily side of things, this is, and I want to pull up some case studies here too, rather than just looking at forward-looking stuff. I mean, this was a great case study on Tesla. If we anchor the volume by price from this low, I mean, talk about a volume gap and a half. And look at where price bounced from, right at this area. Zero liquidity here. That's why it was so easy for the price to drop. There were barely any holders here. So as the price is dropping, it really doesn't, the supply doesn't start drying up until we get down to the 630s. And that's exactly what happened on Tuesday. So that's something to consider. And if we did continue down tomorrow, we have this huge shelf again to kind of look at an area of possibly some type of bounce. Any other last words on Tesla before we move on to the big mover Amazon, which is not
just to emphasize,
right
no, not really. Just to emphasize that this has kind of been the bell cow for the last year since COVID lows. So it's something, or it's a stock that I'm really, really watching over the next week or so.
Yep. And it's interesting that this is one of those things that has been a leader for so long. It would be interesting to see, what takes on that leadership if that changes. And I don't know what it would be. Amazon.
I don't think it's Amazon.
Yeah, I agree. I think that's the problem with a lot of these stocks is they're so big now. It takes so much capital to move them. I mean, think of Amazon. It's a $1.6 trillion company right now, or maybe less after the last few days.
Yeah.
That's a lot of capital it takes to move this stuff.
It desperately needs to split, I think.
It does. I agree. Because, the average retail trader doesn't want to spend $3,000 on a single share. And if you're going to play options and you're a retail trader, I mean, the contract is just as much as the price per share. It's nuts. So if we go to the weekly side of things, I did want to point this out. And this is something that's happening across the board. It's happening on Amazon. It's happening on Home Depot. It's happening on some of these other names, NVIDIA, that just have been stuck for 6 months. And we talk about the volume shelf all the time, potential launch pad, but I think it's important that these volume shelves can be distribution zones. They don't have to be accumulation levels. They can be areas where there's institutions distributing these shares to retail traders rather than, this being a launch pad for price. Ideally, we like to see the launch pad form on the volume shelf. But anytime you have this type of move where you're undercutting it like this could easily be distribution instead of accumulation. And that's something that is really important to notice, that these volume shelves are great, but they are not an end all be all. I hear a lot of people say, oh, but there's a volume shelf there. Well, it's a level of interest. Ideally, it acts as a launch pad or a base for price to move up, but it can easily be distribution. And that's something to consider. Now, if we did continue to break down, if we anchor volume weighted average price from this capitulation in March, that is down around 28.50. So, that's 8% or so below ish.
Roughly. Yeah.
6.5, 8, 6 to 8. We'll make it a zone. And so, that would be a level of interest below. That doesn't mean the price has to get down there. It doesn't mean the price has to bounce there. It just tells us that would be a level of interest below. That's what the average price per share is since we bottomed. So that means that at this point, the average price, or excuse me, the average shareholder, the average share is holding at break even if we get back down there. If it goes below that, that means the average share is holding at a loss. So that's something to consider on Amazon. I mean, we can look at the monthly, but the monthly isn't really going to do a ton. It's pretty much the same as the weekly. If we anchor from this capitulation here, that puts us right around 2,800. So, the volume shelf is a lot easier to read on the weekly since there's just not enough candles here yet. It kind of gets clunky. So that's something to consider with Amazon. Now, Apple, Apple. Unbelievable. But not shocking. Kind of have this, what I'd call very close to a double top here. Sean says Bezos and McKinsey possibly adding to that supply, which, hey, who knows? That could happen. Let's look at that, actually. We have the insider data now. We might as well use it. Let's go to the sidebar. Let's add insider transactions here, and let's see if any insiders have been selling here.
I love this, by the way. Not to interrupt you, I'm sorry, really, but I love this.
What the insiders are doing in this case. Not a lot of sells in the last few days. We've had a $4 million sell. We've had a $3.6 million sell. What you will see is not a lot of buys at all. Back in September, we had a very small buy. But for the most part, these are all sells. So insiders are also selling here. It's not just, it's not just retail and institutions probably losing interest, but the insiders are also selling. And 3.6 million, 4 million, that's not anything when you compare that to daily volume. It's kind of a blip on the radar, but these are insiders. If they were really confident, some of these people sell because that's part of their compensation. They want cash, they want to go on vacation, they want to buy a house, so they sell. It doesn't necessarily mean that they're bearish on the stock, but it's also really important to note that there's no buys. So that's something that's definitely worth considering here. So that's Amazon, but on Apple too, let's see what Apple's showing us on these insider transactions. Not a ton, but also not a lot of buys. We've had some awards. We haven't really had any activity for February. Yeah, $2.3 million sell on January 31st. But in the grand scheme of things, that's nothing for Apple. But it's more the fact that there's no buys. I mean, there are literally no buys at all on the insider transaction side of things. So not only do we have that, we also have the fact that we are breaking down through this ascending triangle. I would argue that this is about as close to a double top as we're going to get without being an exact double top. That's something to consider. If we anchor the volume weighted average price from this capitulation in March, 99 or so is what we're looking at below. And that's a solid move down. That's 15%, 10 to 15%, depending on if there's any margin of error around that line. So that's definitely something to consider as well. There's a question here. What's the delay to make it on the inside transaction? That's a good question. I'm not sure exactly what the delay is there. I think it's pretty real time. I mean, you can see transactions that pretty much happened yesterday on some of these stocks. So I'm pretty sure it's the buys and the sells are pretty much real time to answer your question there.
Anecdotally, I agree. I've seen a few like the week of for sure.
Yeah, so I think it's pretty up to date. Zuck has been dumping. Yes, he has. Zuck has been on a selling spree. He needs to buy some more property on that Hawaiian island and put a lot more of that that sunscreen on his face. That was hilarious when he was like paddle. His whole face was just pale. But yeah, he's been selling. I mean, you don't see a lot of people buying right now, which is also, doesn't show a ton of confidence in some of these people that are behind the scenes. Apple breakdown on the monthly, on the weekly side of things, breakdown of this ascending wedge. So we're kind of seeing this across the board for these tech stocks. I mean, you've got this longer term level of support. and they're all breaking down. A lot of the time you can break down, and this could just be a fake out, but you have to consider that we are getting a slight uptick in volume. We still have tomorrow, and the volume is already bigger than the last 2 weeks. Now, consider that the last week was President's Day. It was a shorter week. So that's something to consider when looking at this. But still, we do have a little slight uptick in volume here. And if we anchor that from the March lows on the weekly side of things, that puts us right around the same thing, right around, I'd say 99 to 102. Remember, we never want to use these precise levels. We want to use more or less these zones. So that's Apple. Tanner, anything on Apple before we go into our last? The only thing that's about green on this this show, Twitter. Anything
I'll just
on
add
Apple before we move on?
real quick. Yeah, I pay attention to the 21, the 21 EMA specifically on weekly as well. And the way we're looking right now, this will be Apple's first close below it since last March. So just something to think about.
Pull that up. 21, apply. Hey, yep.
Or excuse me, April, when we got above it.
That's definitely confirming at
Yeah.
least a break in the trend for now. Yeah, great points. We looked at the insider transaction. The seasonality 60%, a little higher than 50%. If you go since 2015, it's 50. If we go since 2010, it's going to be 64%. So, if I'm really looking to see if there's any type of edge, I really want to see like 85%. I want to see like 10%. Some of these outliers, 50 to 60%, can go either way. That's where you need to bring in the technicals to kind of get that secondary perspective there. So we have one more Twitter, and then we'll get to some of these chart requests. We'll see how many we can get through. If we don't get to your chart request, it's not because we're ignoring you. It's just that we have a specific amount of time. We have to be respectful of Tanner's time and everybody else on here. I could talk about charts literally until midnight, but it's something that we do have to consider with the time. So we'll get through Twitter real quick, and we'll jump into some chart requests. Twitter, oh my gosh, man, this thing,
It's your baby.
Oh man, I sold this one out of spite, and now I'm kicking myself. But thankfully, some of the trades I had in January actually probably paid off more than this would have. But because I did go a little more sized in those positions than I was in Twitter. I think my size in Twitter was maybe a third or a fourth of what I was in Fubo and some of those other ones that moved up big. So either way, a lot of people capitulated, and then we just went straight up. We did have this ascending triangle breakout here today. What is this? Super followers? Is that what it's called? Did they come out with the super follower subscription model or something?
A few new things where I think they're ultimately going to lead to maybe incorporating NFTs into Twitter somehow. But they did. They leaked some news. So I think Twitter gapped up today and then was ultimately red on the day, but still green, obviously. Yeah, considering the candle.
And for those,
but that's a new high.
Yeah, it is definitely quite a move. Unbelievable, honestly. So for those that are wondering, why is this candle gray versus, why is this red? Why is this hollow white? The gray candle means that we closed above yesterday's close. So it's gray because it's representing that it's above yesterday's close, but it's solid gray because we closed lower than we opened. So I always like to tell people, if you're looking at a window shade, if you open up here and you close down here, you're closing the window shade. That's why this is solid. If you open down here and you close up here, you're opening the window shade. That's where you get the hollow candle from. So that's just something to consider if you guys are looking at using hollow candles. There's really not a huge difference between hollow candles and regular candles, other than, the fact that, in this case, this would be a red candle, because if we turn on the regular candles here, this is going to be red. To me, that's not a red candle. That's a green candle, but we want, so the color is a function of the open versus the close on a regular candle. This is red because we closed lower than we opened. To me, I would rather use a hollow candle and know that this was a green day, but it's just not a bullish sentiment from the open. So that's something to consider when you are looking at candlesticks. If you see a red candle on a regular candle, that doesn't mean it was a red day. It could just mean that the close was lower than the open. So just keep that in mind. So an uptick in volume today as well. And notice, this is interesting with hollow candles. If you have a solid green candle, the volume bar is actually going to be red. So just some pointers there on if you are using hollow candles and you're wondering, why is this a red candle if it's a green close? Weird stuff. But it is kind of in line with the regular candle. Instead of it being red, it's just a red volume bar instead. Insider sells. Mr. Jack Dorsey had some options expire, exercised on February 16th. February 21st was what, 3 days ago? So this is this week. For that question, when do these pop up? So this is something that recently just happened. Michael Montano, I guess his name is, sold 161K worth of shares. So the insider transaction are definitely up to date. And look at this. This is just showing that just because insiders are selling doesn't mean the price has to go down. Look at all these people selling big blocks in November. That was way down in like what, the 40s. So, so that's something to consider. Just because insiders are selling doesn't mean the stock is capped. For some, it has been Facebook, for example, but in this case, you had insiders selling through this whole move up, and we still kept moving up. So as anything in technical analysis is, there's nothing that's an end all be all. You're always going to have something that, may not make sense. And this is an example of seeing those insider sells, even though the price is still going up. Those are the individual stocks. Those are the broad markets. Let's look at some requests here. Let's look. So we've had a couple requests come in already. Let's do PLTR. I think that's one of the more overcrowded trades right now. I exited that today because I still think it's too overcrowded. For the sake of everybody still in it, I hope it rips for everybody. But for me personally, if we're looking at this anchored VWAP from the IPO, we closed below that for the first time today. Not what I would look at as the most bullish thing. On top of that, we had an uptick in volume. We do have this support below here, pretty much drawn from this October 21st to October 30th point and extending that line out. If we moved down tomorrow, that would put us down at around 2175. Now remember, and I always say this, trend lines are a function of time. If we go like this, then this trend line is going to meet price at around the same price that we're at now. If we move down immediately tomorrow, then that trend line is going to be around 2175. So just remember that trend lines are a function of time, and you have to consider like where your price levels are based on that. So if we did continue down tomorrow, 2150 to 2180 would be an area possibly where this trend line would start to come into play. Tanner, any comments on PLTR that you want to mention here?
I think this is a good example of where we can look at insider selling. And if you look at all the insider selling over the last week, specifically after their earnings, it's very interesting.
Yeah, Peter Thiel, 500 million. I mean, all of these are multi-million-dollar sells. Now, there was a lockup period. A lot of people were concerned about that, which rightfully so after the price action. But yeah, these are big sells. I mean, this is concerning. If somebody's really that bullish on the stock, I just don't see them selling like that. Now, thank you for bringing that up because I didn't even see that. On top of that, I mean, look at the monthly candle. This is not a monthly candle that I feel comfortable holding. I mean, could we go and have an inside month next month? Sure. Did I think that we were going to go a lot higher, a lot quicker? Absolutely, but we're not. So, this is where you kind of have to take your ego out of it and say, I was wrong. That's not what's happening. Now we do have this broadening formation here on the weekly side of things. You can see that we are undercutting it a little bit here. Worth noting that this would be the fourth red candle in a row. So just keep that in mind as well. Anytime that you have a hammer like this and then you just completely undercut that previous low, that's not something that I would call holding a 20 and the dealer's holding a 15 in blackjack, right? Like I kind of look at setups like blackjack. They're all probabilities. That's all this game is it's looking at things that are probabilities. This is not a hand that I want to hold. Some people really like the story here. But the problem is I think too many people like the story at this point. It's becoming an overcrowded trade. And I think there's still a lot of very passionate holders here. And that's why I think it will go down a little lower. And then I will definitely be a buyer at some point. But for now, I don't like that monthly candle, personally. Any other comments before we move on to another one? Let's see. What do we have? Space. Fubo. Look at Fubo. This is another one that I think it just became too overcrowded of a trade.
Yeah.
The one thing I will mention here is the fact that at least for now, we do have decreasing volume with decreasing price. That's something to consider, but we also have tomorrow left, and Fridays can definitely bring in the volume. On top of that, after hours price action is what, 32.30 or something like that. I mean, it's not what I'd call the strongest after hours price action. So that's something to consider. If we do anchor the volume by price from here, let's anchor it from here. That volume shelf, we're kind of going through that liquidity gap. The next shelf is around $30. And if we anchor the VWAP from this area, the VWAP is pretty much right where we're at right now. Now, notice, though, this VWAP has been undercut multiple times. See here, we undercut it the next week. So that's something to consider going into the week ahead. And I think earnings, Tanner, are the second?
It's soon. Yeah, I want to say it's next week. Yeah.
So that's, I personally like to see the stock sell off before earnings, rather than rip. But we also saw that with PLTR, and then we gapped down like 10%. So, take it for what it's worth there. Let's see. A
few big earnings next week. NEO has earnings, and then I'm watching Zoom's earnings too.
Ooh, Zoom. Interesting. That one, we'll have to look at that one. All right, everyone, we just went over Fubo here, so that one's already taken care of. Let's look at AMD. This thing is probably the most frustrating stock I've ever traded in my life, and I'm probably never trading it again. I mean, I've gotten lucky with this one more than anything. I have these crazy drawdowns, and somehow I get out. But the last time with earnings, I got kind of taken to the cleaners on it. But in this case, you can see if we anchor that volume by price from the March lows. Keep in mind, we are using the March lows as our status quo change. This is when the markets reversed. This is when COVID happened and things went up from there. So that's why we want to see what was the volume since then. Now, let's anchor a VWAP from this area. And you'll notice here that if we break through this volume shelf, we don't have a lot of liquidity until we get to this VWAP. And that's at 69. Eesh. Yeah. And this is a great case study on having really, really good earnings and still taking a crap. People are like, oh, the company's so good, it can't go down. Yes. Good companies can go down if the expectations of that company are already priced in. On top of that, you've got some decent insider selling going on here. You've got Lisa Su selling 11.4 million shares $11.4 million worth in early February. I don't see a lot of buys on the screen here at all.
Yeah.
And that seems to be a recurring theme across the board. Is AMD one that you trade much, Tanner?
No, not personally. I've seen too many times. I've seen, just like you laid out, too many times. So I've kind of stayed away. I would love it down there at 70 though.
Yeah. That would be quite a move down from its highs.
Yeah.
Let's do two more, and then we'll wrap this thing up. Let's do NEO. You mentioned earnings. Do you have the date on that, Tanner?
Monday after hours.
Monday after hours. Okay, good to know. Anchor the volume by price from the COVID lows. We do have this little shelf here acting as a level of interest, at least for now. Keep in mind, though, from these lows, we're literally up 1,800%. Is this going to be a sell the news event? We'll have to see. But if we did start to break down, there's your volume gap. Not a lot of liquidity below. However, if you do finally get a bid here, this would be an area where buyers could possibly step in, and you've got some of that supply drying up. Now, the point of control is way down at $13 a share, something to consider as well. And, so what that means is there's a lot of people holding from $13 that are up over 200% on this. The more that you're up, the easier it is for you to sell because you have that profit margin to work with. AMD is a very bad boy. It's just a bad stock. I love what they're doing with the company, but damn, that thing is annoying to trade. So that was NEO. Let's do one more. Let's see if there's one that's kind of common across the board here. NEO is definitely one. Let's do apps. I have seen this one all the time. APPS.
This made a monster move off of Tuesday's lows. It jumped like 20% from Tuesday's lows just within the day. Look at that candle, and then this
almost perfect.
Yeah, filled that gap just about. Yeah, earnings gap. Still got a little left.
Still a little left, but what a move. I mean, 66 to 81.
Yeah.
About a trade that day. This is the daily candle. We still have the gap below. On the weekly side of things, three red candles in a row here on the weekly side. I mean, if you look back since this uptrend started, we generally don't have more than two in a row. So that's definitely something to consider. And then on the monthly side of things, we're still green. We've got this wick here. That's something to consider. But, clearly in a very strong uptrend. I know a lot of smart people on FinTwit love this stock. So it's something that, is worth considering. And just the fact that it's just such a strong stock. I mean, but the thing that's really interesting here is if you look at these kind of past the IPO highs in 2008, we're literally just breaking through those again. So it would be healthy to do one of these. Boom. Well, can I draw? Yeah. Do one of these. So, just because this pulls back to even half, it's still, we're at that point where we're so overextended. These stocks can drop in half and we're still in a very strong uptrend. That's just how overextended the markets are right now. So something to consider. And I know we talked about Zoom. Let's finish it up with Zoom. Zoom, you mentioned, also has earnings coming up.
Yeah, I want to say they're Monday too, but I'd have to, let me confirm that.
All right.
As you pull it up.
Guys, get rid of these. Let's anchor the volume by
price. They're Monday after hours too.
All types of earnings coming. So this is one that, has also had a ridiculous run. If we anchor the VWAP from this low in December of 2019, remember, Zoom did not hit new lows from COVID because it was in such an industry that benefited so much from it. Notice what's interesting here. The anchored VWAP from this low, this pivot, is right in line with this shelf below. So that's something to consider. If we did start moving down, same thing. You guys are going to get tired of me saying this. No liquidity. There's literally no holders here at all until we get down to like 260. And even if we got down to 260, we're still going to be very much in a longer term trend to the upside. This is, if we draw kind of this setup, this is still an uptrend. So, these stocks can pull back significantly and it would be healthy at this point. So let's just keep that in mind. On the insider side of things, not a ton of price action. Well, just kidding. Eric Yuan, I'm not sure how you say his last name, sold over $50 million worth of stock in mid to late January. That's something to consider. I think that's the CEO. Yeah, pretty sure that is. And then, if we look at it hasn't been around long enough to even look at seasonality. So, all righty. That was a nice long session. I think we have hit about everybody's attention span. And hopefully this was helpful for everybody. We've been using TrendSpider this whole time. We've been using the anchored VWAP, the anchored volume by price, seasonality, insider transactions. All of these features are unique to TrendSpider. If you do want to give this a try, CH25 is the coupon code that you can check out. That's 25% off any plan for either a single month or a single year. So that doesn't mean that, you can use CH25 for the next 6 months, individual months. It's either one single month or it's a single yearly subscription. So you're definitely going to get a better deal signing up for the yearly side of things. Tanner, you are the man. I really enjoyed doing this with you. I think at this point I can really call you a friend. I mean, you're someone that I really admire, just the fact that you've just grown such a following and such a you're just so passionate about trading in the markets that it just shows. And I think it's really cool that we've been able to virtually become friends. Hopefully when things cool off and we can finally have a TrendSpider get together, we'll have everybody there, and hopefully you included. And it's really going to be great. Is that in a year? Is that in 5 years? Who knows? But I'm convinced that it's going to happen. I'm positive. I'm optimistic. And Tanner, you're just such a great sport, and thank you for staying on a little longer. We are definitely 15 minutes over the time limit here. So yeah.
I appreciate everything, Jake.
Hey.
The feeling's mutual. Yeah, you guys have been awesome. The whole TrendSpider team's been awesome. So I really appreciate it.
Hey, well, you're definitely someone that we respect a lot in this industry and this overall community that we call FinTwit. And I really love the work you put out, and you're gonna surpass me in followers like next week at this point. So I definitely am honored to have you on here and talk charts with you. I'm looking forward to hopefully doing another one of these in the next couple months. A big thank you to everybody that joined this live stream. If you guys like the live stream, we'll keep doing it. I know a lot of people are like, hey, this is recorded. What? I thought this was live. This is live. I'm talking right now. If you guys like
my bedtime.
Yeah. We gotta get Tanner out of here. So
that's all
right. That's the nice thing about being in Denver. The markets open earlier and they also close earlier, and then all my friends are playing Call of Duty with me, and it's like 2 o'clock in the morning there. And I'm like, oh, we're just getting into the next day in Denver. So that is interesting, because I always lived on the East Coast of North Carolina, and it was just always interesting. It's like, oh man, I don't want to wait till 9:30 in the morning for this damn market to open. So, but that also means that I have to wake up earlier, which isn't a problem.
True.
But yeah, everybody, you guys have been awesome. Thank you so much for tuning in. Tanner, I think we had almost 300 people live here. So
cool.
It was a huge turnout, and I'm looking forward to doing this again. And to the production team, if you guys can hear me, I think we're ready to sign off. Once again, CH25 is the coupon code that you can use. This is Tanner at ChartingOptions on Twitter. Make sure to give him a follow. Make sure to give him a shout. Thank him for tonight. He took his own time out to do this tonight. So really appreciate everybody. And if you have any questions for us, let us know. And for those on the East Coast or even Central Time, have a good night, sleep well, and we'll see what the market brings us tomorrow.
Rest up. Yep. Later. Thanks, Jake.